Hey everybody, it's Eric. Welcome back to the channel. Recently on the channel, we've been talking about risk-free trades, and I wanted to do another video about a trade that I'm in right now, which I did not get risk-free, and it's a multi-day trade. And I wanted to talk about how I'm using the same concept of selling and offsetting spread to reduce my risk. So this is more about reducing risk, locking in some gains. We're going to give up a little bit of our max gain to have a wider profit area. And this is still in the realm of forest trading. And the idea here is that when we look at the risk graph for our trades, and these are trades that are expiring today for me, we look at the risk graph where price is, and we want the most green we can get to give us the highest probability of winning. Right now, with the current trades I'm in the profit zone, but we have a long way to go before the close. It's about 11 o'clock. We got another, 4 hours or so before the market, or 5 hours before the market closes. So let me talk through the trades that I'm in, and then I'll show you what I did today to help reduce that risk and create more profit zone. So first, I'm in two put credit spreads that I opened last week. This one way down here at 59.30. 59.35. This was a 7-day to expiration put credit spread. We sold it at the money. And then on Friday, I had a 3 DTE that was also a put credit spread where I sold the 6,000 put and bought the 59.95. Both of these trades were from the Alpha Crunching Trade Ideas tab. This is updated every week, and you can see this is the week of 6/9, but last week most of these trades were here as well. And the one trade, the 7-day put credit spread, is on Monday. It's taken at the end of the day. We make sure our moving averages are in check, and this is based off the weekly triumph rate. And there's some details here. If you want to create an account over here and get a 50% discount, you can use that code on the website. But this is the trade, the original put credit spread that's way down at 59.35. And then on Friday, we don't see it here, there was an additional 3-day to expiration trade. So there's a whole list of trades here. This week, we're looking at, 7, 8, 9, 10 different trades that you can choose to get into. These are all back tested for you, tell you which day of the week and what time of day to put them on. So this is a great idea generator. If you're looking for something before the market opens on Monday, we're looking at this list to see which ones we might want to do. I pretty much do all the credit spread trades, and I think we have 7 of those trades this week. So those are the 2 trades I'm in. They were from last week. And I'm just going to scroll down a little bit here so we can kind of box this in. What I did today to create a wider green zone is I basically sold the 6,000 call and bought the 6,005, and I got a credit of $3. And so now this is what my risk graph looks like. Again, it's not risk free. I have risk way down here, but the market would have to sell off and we would have to close, 70, 80 points lower for me to actually experience that max loss. But by selling that call credit spread, let me kind of explain what that does. So basically, the way I look at this is we have profit zone up here. I look at these numbers. $410 is the max gain. If at expiration, we are at 6,000 or above, these spreads would expire worthless and I would get to keep all $410. If the market sells off into this zone, I'm going to lose 90 bucks no matter where it lands in here. And then I have the most risk down here, which is $590. So what I'm trying to do is basically take some of the profit here that we're going to have if the market stays up, and we're going to shift it over to this zone. And the way we do that is by selling that call credit spread. So instead of $410 wins over here and $90 losses over here, by selling that call credit spread, I now have $210 win over here and a $210 win over here. So I'm, kind of capping my potential gains, but I'm improving the probability that I'm going to win. And also we're adding a nice big, profit tent. For those that saw the video last week, we closed right at 6,000 and I got the max gain. I don't know that that's going to happen again today. However, it's possible if we close at 6,000 or in the profit tent today, I could actually make more than that. So this isn't risk-free. We've definitely had things going in our favor. Alpha Crunching was right this week. These were good trades. So we are basically selling credit spreads to offset potential losses and really just to remove risk. Again, not risk-free. You don't always get a risk-free trade, but that's what I got, and we'll see you in the next video.